Hello, everybody. Good evening. It's about 8 p.m. It's on Sunday, 13th of November 2022. What I'd like to do today is to just kind of get ready for the week. Just to take a real quick look at a few different stocks. Maybe also take a little look at Bitcoin. Before I get into any of this analysis, I just want to reiterate this is not financial advice, and I am not your financial advisor. Your trades are your responsibility, and all of this information that I'm sharing here is just my opinion, and it should be used for educational and or entertainment purposes only. So what I'm going to do is go ahead and kind of move on into the chart. Again, this is going to be very informal. It's going to be very different from some of my other videos because what I'm doing here is I'm just kind of preparing myself for the week. So this is a chart that I do reference every now and again, looking at a few different things here. What I want to do first really quickly here is explain what I have here on my chart right now. And all this is, in addition to having the Wave Master indicator down at the bottom, I have a squeeze indicator that I've created that's right here as well. It's very, very similar to the TTM squeeze, I'm not going to lie. This squeeze indicator is very similar to the TTM squeeze. It just shows different layers of tightness of that squeeze as the colors go from green to black to red to orange. The orange is really the ones that you really pay the most attention to. I'm on the daily time frame here, so this is sort of like a longer term outlook. But all of these different lines that I've got here on my chart, it's nothing more than Keltner channels. It's nothing super spectacular or complicated or anything like that. It's simply Keltner channels. The white line that we have here, this is our midline. This is the basis, which again is based on a 20 simple moving average. Then we have the green, yellow, red, and blue. These are just basically standard deviations. So the green is a standard deviation multiplier of 1. All right. The yellow is a standard deviation multiplier of 2, so on and so forth. So we've got 1, 2, 3, and 4. I'll call them plus 1, 2, 3, or 4, or minus 1, 2, 3, or 4. And what I want to do here is just kind of explain, how the market has been moving throughout the year. And I'm going to do a little bit of a correlation to Bitcoin with this as well, because I think it's kind of important to do that. The other thing that you'll notice is we've got red and green and yellow indications on here as well. If you are already familiar with ADX, when these candles are green, that means we've got positive buying power as shown on the ADX. And then if it's red, we know that the negative indication is prevalent on this as well. If we've got yellow, it's kind of neutral, nothing super clear on direction. But if it's green, ADX is good. If it's red, ADX is bad. And then we've also got little dots that also are showing, as you can see right here, a little dot here. What that is indicating is that we have more than 50% of the average volume for that particular day, which I think is very, very important as well. As you're looking at things, as I do day trading of stocks, we did really actually pretty good last week on the S&P. We did some SPX trades. We did some trades on, I can go back here and take a look. We did Netflix. We did NVIDIA. We did some Qs. We did some Amazon, Tesla. When I'm looking at that, I'm looking for volume. And that's one of the reasons why this is so important. But back to kind of getting ready for the week, what I want to pay attention to here is each and every time the market has gone down into a -3 or -4 on our Keltner channels on the daily, right? So kind of got a little close here. Of course we went pretty low here, getting closer and closer, but then obviously down here we have areas where we have kind of extended lower. And each time we've done that so far, it has been met by a certain amount of buying pressure, right? A certain amount of buying pressure. And that's no different than right here where we hit that -3 ATR, and then we made a new low, and that was met with a ton of, again, buying pressure, right? So we had a good move up from there. But let's also now take a look and just to understand for a moment what has happened with our bear market rallies. Okay, so we've had significant rallies ever since then. We went down here to -4 ATR, then we came back to the baseline, we tried to go to +1, didn't quite get there. Okay, we fell, we went lower, we hit that -3 again. Okay, once we hit that -3 again, it was met with a ton of buying pressure, right? Once we had that buying pressure, we went up to the +2 ATR, and of course we rejected from there. That's an important level I want to pay attention to. We got to +2 ATR, and we saw a significant drawdown from there. And in addition to hitting that +2 ATR, that coincided with a significant sell signal on the daily, on our wave master. And again, this is on the daily. This is the daily wave only that I'm showing on this screen. And just to kind of show, kind of the method behind the madness, I've got multiple time frames in here that I do pay attention to. Each one has its own wave. It's got its own separate structure. I'm paying attention just to the daily right now because I think that's the most important to pay attention to at the moment. Okay, now, next. We went back down here to -3 ATR down here in this area, and of course it was met with a ton of buying pressure, right? So we got a lot of buying pressure. This is also an area where we were talking about, in accordance with Elliott wave theory, we were expecting July to be very, very green. So I wasn't planning on fighting that because I did expect it to be green. And well, what ended up happening there? Okay, so we went to +2 ATR. We rode the +2 ATR for a while, and then we extended up, and we got past the +2, almost to the +3 ATR. And then again, the Wave Master was kind of saying like, we're gonna go lower. We're gonna go lower. You should be considering selling here, right? You should be considering selling because it looks like the price is going to go lower. I don't remember exactly where we shorted, but it was somewhere in this range. We were talking about getting short again. We got up there, and then of course what ended up happening, we had another forced selling. And again, I'm just going to highlight over here, we were kind of flatlining up here in the overbought area for quite some time, and then we've come down. We went to -2 ATR, we rode that, we had a decent rally off of that, we got to +1 ATR, and we got a rejection. Then we rode the -2 ATR some more until we came down and we hit that -3 ATR area. So we got to -3 ATR, we made those new lows, right? And I guess you could consider this a, kind of like a poor man's version of bullish divergence, right? Where we hit this ATR level, this -3 ATR, and then we made a new low, but we didn't hit the -3 ATR again, so the strength was not as strong. What we also got, I'll just point this out, we created a new low here, and on the daily wave master we did create a little bit of bullish divergence there, so we pay attention to this, right? So we did end up going up, and now what we ended up doing is this is all the way back here, at the very end of at the end of October, beginning of November, we were talking about going short, and we were met with a sell signal, and we did see a bit of a pullback on here, and this was going into this was kind of going into the week before elections, and from down here we see that we didn't make it to -1 ATR. We came from up here at +1, a little bit past +1, and now we are going almost to +2 ATR. Do I expect us to get to +2 ATR? Actually, I do. I think it's very possible, even though we're only trading at 39.88, 39.89, and if you want a correlation to the S&P 500, ES is currently about 10 points, 11 points higher. So this is about the equivalent of about 39.80. We'll call it an even 39.80 from where the prices are at right now. Do I think we're going to go higher? Yeah, I think we're going to poke this +2 ATR. What happens from there, I do expect we're probably going to see a couple things happening. I think we're probably going to see some bearish divergence here on the Wave Master indicator on the daily. I think we're going to start to see a little bit of a rejection up here. There's a lot of people that have been talking about The fact that we kind of hit that 4,000 area and we weren't able to push up through it. So I do think that we're going to poke up above. We're going to hit some stops. It's going to cause a little bit of, upward buying pressure. We'll see what happens from there. The reason why I've titled this video that we're going to prep for the week with SPY, and in this case we're looking at the ES futures, but also want to take a look at Apple and Tesla, because they're going to tell a story as well. Apple is one of the highest weighted stocks that are included in the S&P 500. So let's just take a look at Apple, because it doesn't look terrible. It really doesn't. Okay. Looking at Apple, going all the way back to, the beginning of 2022, the very, very beginning of the year, Apple is up here at about 180, right? So, it topped off at, like 182, 182.94, almost 183, right? And it's gone all the way down. It's had a significant decline. So if I wanted to take a look at this, we went down. It's dropped 30%, and we're going all the way back here to June, right? So from January to June, it dropped a significant amount. But what I do want to point out is when the S&P 500 was making new lows back here, Apple was not. So there is some strength behind Apple, even though Apple is having production issues. They're having some other things that they're dealing with. That are all production related. I think the demand is going to continue to be there for Apple, but they're having some production issues. But take a look at the daily wave, right? So the daily wave on Apple is, it's crossing bullish, right? It crossed bullish as of Friday. That was the day where we had the confirmed cross, and now it looks like we could see higher prices on Apple. Where is it going to go? Well, right, we closed at 149.70. If we do continue higher, I would expect we're probably going to test this +2 ATR, which is going to be up here at about 156. So not a whole lot of upside, but I do think that the upside potential is there. We'll have to kind of wait and see how the day plays out. But if Apple does go up another, we'll call it $7, I guess that is almost exactly $7. Well, that is going to cause that increased pressure in the S&P 500. Now, let's take a look at Tesla, because this is one that has just been beaten down, right? So obviously, we know that there are issues with Tesla because it's the only kind of exposure that people can really get to Elon Musk right now. And he's making some interesting decisions. We're not sure what's going to happen with Twitter moving forward. We already know that SpaceX is fairly successful. We already know that the Boring Company is able to produce results. But Elon Musk's endeavor with Twitter is kind of a wild card. So it could be that, we aren't going to cross here. It could be that Tesla continues to drop. I am bearish on Tesla below 200, right? If we cross 200, then I can start seeing myself getting into something. But taking a look at the squeeze on Tesla. So I want to focus on this squeeze right here. We were moving sideways for a long, long time. And then when it broke out of that squeeze, it went up. Okay, so we had a nice positive breakout of that squeeze. So then what ended up happening? We had a little bit of a squeeze back here where we had a little bit of a rally. It rallied, started squeezing, and then it started to fail. And basically the squeeze broke out to the downside. And that squeeze broke out, 4 days ago. So last Tuesday, we saw Tesla break out of that squeeze. It started to move down. Not really great. We did have had a 2.75% day on Friday, but we still need to see a significant bump in order for Tesla to get above that $200 level, and then of course to see higher prices. The reason why I'm so bearish below 200, the fact that we've got a lot of kind of resistance in this particular area that's been clearly defined here, right here between this right here, about 199 and 204. Here in this area, we're going to have lots of resistance, and I could, go back here, find some more resistance. It's going to be there at about 208. If we start to take out some of these levels, then I can definitely see us getting to that +2, +3, maybe even +4 ATR that would be a little crazy if we were to actually go up that high. We will get there, right? But also keep in mind that these channels move as the price moves. Obviously, you can see that right in front of you. As this price continues to either move up, sideways, or down, the channels are going to move with it. So are we going to get all the way up here to plus 4 ATR? At some point we will. I mean, if you could just take a look at the chart here, we already kind of did, right? We did in a few different areas. We got almost to this plus 4 ATR up here. We almost hit it right here as well. So it has the potential to get there. But fact of the matter is, if we take a look at ADX, right now ADX is negative, right? So we see that right now sellers are in control. The squeeze broke out to the downside, meaning sellers are in control. And, this may be just a little bit of a rally that is probably going to be met with supply. And supply meaning we're going up to an area where people are going to be trying to exit their positions. People are interested in selling above 200 because, if you take a look at the chart throughout all of this history here in all of 2022, you've got a lot of people that were buying between say $207 and and $383. So we got a lot of people that were buying here in these areas. And if we're going to get a little bit of a rally, once we broke down through this $200 level, you're going to be met with demand. There's going to be people interested in selling their position as the price continues to move up. The Wave Master indicator right now, it looks pretty good if I have to admit. I do see some signs there could be some bullish divergence here. Tesla could see prices moving up, and the way that I intend to play Tesla is I'll be taking it as a day trade scenario. I'm not going to buy the shares. I'll take advantage of whatever momentum I get intraday and just try and day trade some options on the call side once it breaks above 200. Again, looking at that $200 level as the most important area. If I go down here to a 4-hour time frame, again, we'll zoom in just a little bit. You can kind of see where these levels are coming from. This level right here at about 204, 204.50, this area here, this is going to be very important if you're interested in day trading. Taking a call position on the break of 200, taking profit when it hits that 204, that 204.50 area, that's probably a pretty smart thing to do. If it breaks through there, right? So a lot of times when I do, when I take my trades that are day trades, I'll say, I'm just going to keep it easy. Let's say I get 4 contracts, right? And I get to a significant area of resistance. I'll cut half that position most times. And then I'll see if it continues going. If the momentum is good, I'll stay in it and I'll let it go. But for Tesla, the next area and I'm on a 4-hour time frame here, but the next area that I'm really looking for Tesla to head to is going to be right there at about 215. So again, we've got this right here at about 204.50. We've got a 215. Now, if it breaks through 200, I'm not expecting it to go straight to 215. I'm going to have a little bit of an intraday level right there at about 209. We'll call it 210. Right, so going from 200 to 204.50 to 210 to 215, these are areas where you'd be looking to, take profit of those. So, shave positions as you go. Don't hold your options too long if they're not working for you. And that's kind of how I look at these. And obviously, I'm looking at a 4-hour time frame now, just kind of feeling out these levels. And then from here, I can pop out. And I can go into a lower time frame. So I go down to a 5-minute time frame. Now I can take a look at this with a lot more clarity and see where things are at, right? So obviously you can see we've got some support here, some resistance here. So again, if we break through the $200 level, so that's this green zone right here, if we break through 200, well, then I think we're quickly going to get to this 204 area. If we break through 204, I think pretty quickly we're probably going to hit that 210. And then, of course, once we break through 210, we go to 215. And again, a lot of times what you'll see me do very commonly, you'll see me on a break of 200. And in this particular case, what I might be willing to do is actually take a long position on a break of about 196.75. That 196.75 is going to be all based off of 2 factors. Okay, the first factor is going to be this level right there, and then the second one is going to be this level right here. If it breaks through those two areas, well, then I think that we're going to get that at least test of 200. Kind of looking at this, one level at a time. If you're getting on a breakout of that 190, we'll call it 197, right? You could be looking at like a 200 or a 205 call, and then kind of shaving it off as it hits those levels of interest, right? Where I would expect there to be supply. Once you get to one of those levels, you start shaving off profits. So this is kind of some information also for the members on our Discord. And if you need access to our Discord, all of the information is available on BitDoctor.org. We play, we day trade options almost every day. Whenever there's a directional move in the market, I like to take advantage of that because usually there's significant money that can be made there if you know what you're doing. Kind of going through that, these are the levels on Tesla that I'm interested in. I don't really see anything super good on Apple. Obviously, it already had 2 great directional days. I'm not really interested in getting into, looking at Apple, because really what it actually looks like to me is, we have a significant level here at about 152. But aside from that, this looks to me like we're going to see significant resistance there. And the reason why I say that is because there's a key level right here where we had this sell-off. So this was the sell-off back here on November 2nd, right? It caused a pretty big drop. So if we get back up here, let's just say we get back up there within the next couple days, you got to be real careful because we're getting back to that same area. Because fact of the matter is, you had a lot of people that were buying up here, right? We had some support here after we had some resistance, and then resistance right here at that same exact level. That's important, right? These levels are not here by accident, right? They're there. These are caused by people buying and selling, and we're going to hit that level again at 152.20. And there is a decent amount of probability that we're going to see a rejection from there, which is one of the reasons why I'm not interested in playing Apple. Now, if it gets above 152, if it gets above 154, then I'll start looking. But for right now, I'm not interested. It already had 2 great days. The probability that it's going to continue having great days is actually not that great, right? After you had, from down here, it had a huge move. Obviously, the whole market did as a whole, right? Apple opened up 4.4%. Apple closed, right? If we get to the end of the day, Apple closed up like 7% that day. And then, of course, the next day, it went up significantly as well. What a lot of people fail to realize is things don't move up in a straight line. And there is decent probability that we will see a pullback. When we see that pullback, we'll have to wait and see how it forms to make a determination on whether or not we're going to see continuation to the upside, or if this was a correction that is now finished and we're going to continue moving down. So again, what's my outlook? My outlook right now is I believe we're going to see a little bit of upside. We could move sideways this week. If we move sideways this week, I think the top is in short term, and we're going to see movement back to the downside, maybe back down to 3,500. If we see a move up, well, I think we're probably going to cap out somewhere between 4,100 and 4,150. And then from there, I think we're going to top out, and I think we're going to continue moving down for the rest of the year, potentially into January. I just recently kind of shifted my time frame just a little bit based off the price action from last week. I think it is going to put a delay on where I think the market is going to go. So potentially into January, we're going to see that move down. Now, I did say that I wanted to look at Bitcoin. So before I move into Bitcoin, I just want to say if there's anybody here that is only interested in stocks, I'm pretty much done with stocks. I do want to talk about Bitcoin in particular. And I know there's a lot of people interested in that. So let's go ahead and move on into going back to the daily. Moving back over here. All right, so let's go ahead and pull up Bitcoin. And I'm going to pull Bitcoin on the Coinbase chart. What I want to look at here, again, I'm on the daily. Now, almost every time, and I'm going to go all the way back here from the 60, the 60, where did Bitcoin top out there? Almost 69,000. Almost every single time Bitcoin has gone to the -4 ATR, right? Almost every single time. It got really close here, but it has found significant bottoms, right? So we're finding this push down to -4 ATR, and it just happened again. And, it just so happens that I was telling everybody on the server, like, hey, I'm going to be buying at 16,000. And, we're only at 16,224. Yeah, we're continuing to see movements to the downside. But every time we've seen price action go down here, we've seen, at least an amount of support at those levels, and where it's you kind of leveled out just a little bit, maybe even saw a little bit of a push up, right? So we get into some positive territory. We went to +3 ATR as an example here. After this move to -4 ATR, we went to +1 ATR here, right? So -4 ATR, we went to +2 ATR. Came back down, went back up to almost +2 ATR. Then went to +3 ATR. Now we went back down here. What ended up happening? We went to +1 ATR, then we had a rejection. Then we went to +2 ATR 1, 2, 3 times, right? So just to kind of give you an idea, I don't have any reason to believe that that's not going to happen again. Now, what I will say is we went to -4 ATR here. We hit it again. We hit it again. We hit it again. But when we got the rally, we saw a decent one. And what I will say is we do have a decent amount of volume on these push down points that we've had. But one thing that I have learned this week is, these capitulation phases are I guess I shouldn't say that I've learned this, because this is known. We've experienced this in crypto before. We experienced it in March of 2020. We experienced it in November of 2018, and it's been experienced many, many, many times before that. Whenever there's a capitulation phase in Bitcoin, it's always been a really decent time to be buying, right? So again, I've said this before, and I'm going to say it again. 2, 3, 4 years from now, it's not going to matter if you bought Bitcoin at 17,000 or 16,000 or 13,000, because the probability is that we're going to see Bitcoin much, much higher, right? After the FTX exchange completely got obliterated, we didn't see Bitcoin drop to zero, right? It's still a very resilient asset, even though, yeah, it's dropped a significant amount. But again, this is not something that is new, right? This shouldn't be new news for you. If you've been in crypto for any amount of time, let me throw on my log scale here. And what I'm actually going to do is move on to a different chart here. So let me pull up Bitcoin. I'm going to pull it up on Bitfinex. Okay, so again, from the top to the bottom, how far did we go, right? From the top up here to the bottom that we saw back here, we saw a 77.39% drop. Now, from Bitcoin's perspective, that's actually not that bad. It's really not. If we compare from this $20,000 top to the $31.25 bottom, that was 83%, almost 84%. So, do I think we're going to go lower than where we are right now? I think it's very possible, right? I think it's very possible. But to see significant drops in the crypto market is not anything that should be new, because this is definitely not new, right? So we saw right here another 70% drop. And this was just in the middle of a correction phase where Bitcoin had already dropped 83%. These types of pullbacks, at least in the crypto world, are, they're healthy. It's not, it shouldn't be seen as a negative thing. And again, kind of going all the way back here, we've seen Bitcoin have significant drops in its history. I mean, here's one where it went down like 90%, but we'll just give it, we'll give it the benefit of the doubt here and say still an 85% drop, 83% drop, 70% drop, and we've gone down 77% so far from the all-time high. Can we go lower? Yeah. Would it hurt if we went lower? No. No, I don't think it would. Take a look at the Wave Master. This is going to be the last thing I'm going to say. I'm on the daily time frame on the Wave Master here. And what I want to point out is we've got the green, the yellow, the red, and the white that got all the way down here into this oversold area. We had a good buy signal based off of that. And we had to wait 2 times for that to happen before we saw a significant move to the upside. Right now, the white and the red wave are all the way down here in oversold. Okay? The green wave, which is our daily, is almost there. The yellow wave is going to start moving down, right? So the yellow wave, you can see we have a bearish cross on the yellow wave after we had a bearish cross on the daily wave, right? And just, just to kind of point this out, we had that bearish cross on the daily wave back on November 7th. The next day it dropped 10%, and the next day after that it dropped 14%. So just to kind of show you the importance of paying attention to these, we now have a bearish cross on the yellow wave here, and we're getting close to an area where we're going to see, all 4 of these getting into the zone, right? Now, one could say that we had a good buy zone here, right? And to be fair, Bitcoin did go up 13% from there. And then, of course, we're getting close to that same area again. I did nibble on Bitcoin at 16,000. I will nibble on another push lower. But I believe that these are to be seen as longer term plays, right? But when I say nibble, I'm talking about, as an example, let's say you have $1,000. I would put like $100 at a time, because you don't want to just, go all in, because what ends up happening is, well, okay, first off, I would never suggest going all in on anything, but just taking a portion of the capital that you're willing to put at risk on Bitcoin, which is a very, very high risk asset. But, that's a topic for another conversation. Split that money, split that capital into equal size segments, and just take little bites as you go. That's what I mean when I say I took a nibble on Bitcoin at 16,000. And again, I will continue taking little nibbles on the way down, because I think that we have potential to go a little bit lower, but I want to get into a position because chances are pretty good here in the next couple months we are going to see a really, really, really significant rally on Bitcoin. And, these prices that we're at right now, they're going to be, kind of in the history, and you're going to have a lot of people saying, man, I wish I would have bought. I wish I would have bought. And those are the people that are going to be buying on the way up when I'm going to be looking for an exit. So that's what I've got for you right now. So this is now almost 8:30 p.m. on Sunday evening. So hopefully this video helped some of you in, in some way or another, just to kind of, prepare myself for the week. If this video did help you in any way, shape, or form, or if any of my other videos that I have helped you in any way, you know the deal. Like, subscribe, share. If you need access to our trading room, if you need access to our education, if you need access to our Wavemaster indicator, if you want access to our day trades, you can find all of that information on BitDoctor.org. And of course, last but not least, wherever you're in the world, I hope you're having a good day, good night, and a good evening. Take care, everyone.